Welcome to Wealth Wiz. Join us on this awesome financial adventure where we dish out all the money magic. Whether you're saving, investing, or slaying debt, we've got your back. Hit that subscribe button and let's dive into the money-making world. Welcome to a financial roller coaster where the news is far from heartening. The economy is hurtling toward turbulent waters, but don't be disheartened. Once you're aware of the looming predicament, you can take steps to shield yourself and your loved ones from its repercussions. Imagine this. Inflation is surging, the government is mired in debt, and the financial markets are teetering on the edge. It's been a wild, reckless decade of unfettered spending fueled by debt, not just at the federal level, but across state governments, corporations, and households. For a full 10 years, the Federal Reserve maintained artificially low interest rates, accumulating trillions in debt that can never be repaid. But here's the rub. Interest rates are beginning to climb. The prime rate has scaled to 8.2%, and long-term treasuries are knocking on the 5% door, a level not witnessed in over 15 years. We're on the path to higher than normal interest rates, but here's the kicker. We're ill-equipped to handle it. With low savings and high debt, our financial foundation is shaky at best. The debt keeps piling up and it's a ticking time bomb. This isn't your run-of-the-mill fight against inflation. It's an uphill battle, and we're at a significant disadvantage. Inflation, that financial specter, possesses a crafty knack for sneaking up on us when we least expect it. Prices are ascending at a dizzying pace, but the cause isn't our increased buying. It's the simple fact that everything is costing more. This insidious inflation wave, fittingly labeled the Biden inflation tax, has been fermenting since 2013. However, the official Consumer Price Index, CPI, spins a different yarn compared to the gritty reality we encounter daily. Take the case of newspapers and magazines, for instance. According to the CPI, their prices climbed by a mere 30% over a decade. Yet an impromptu survey of magazine covers reveals a jaw-dropping 130% price surge. So, what exactly happened to that extra 100%? It seemingly evaporated within the labyrinthine corridors of statistical analysis. The government's transparency about inflation is at best questionable, and it comes as no surprise that the popularity of the Biden administration is taking a nosedive. The labyrinth of inflation, as it unwinds before our eyes, deserves deeper scrutiny. It's not merely a case of escalating prices, but a pervasive influence that seeps into every nook and cranny of our daily lives. The Biden inflation tax is in essence a hidden levy imposed on Americans, impacting everything from groceries to housing. The official statistics, such as the CPI, conveniently downplay the real extent of this financial burden. We find ourselves pondering the widening chasm between the numbers presented to us and the hard-hitting reality we encounter at the checkout counter. It's a tale of obscured truths and obscured costs, and this growing discrepancy casts a long shadow of doubt on government claims. The public's dissatisfaction is growing in tandem with this widening divide, and it's becoming increasingly evident that inflation, the invisible menace, is poised to reshape the financial landscape in ways that no one could have anticipated. Curious about how this economic turmoil impacts your day-to-day life? Buckle up, because you're in for a rocky ride. If you've been feeling the squeeze, you're not alone. The impact of inflation is far-reaching, stretching its tentacles into your wallet and affecting everything from your groceries to your rent. It's the uninvited guest at your financial dinner table. Economic turbulence are beginning to feel the heat. Their stock portfolios and high-value assets are suddenly in jeopardy, and the looming crisis is sending shivers down their spines. While they might make more money out of thin air. While this might provide momentary solace to borrowers, the ripple effect is bound to affect all of us. The consequence of this monetary magic trick is higher prices, which will be felt across the board. In essence, it's a domino effect that reaches into every aspect of our financial lives. So in a way, we're all paying the price, not just for student loans, but for a broader economic issue that's been brewing for years. Be part of our money family. Join our growing tribe of financial wizards. Subscribing means unlocking a treasure trove of financial wisdom, deep guides, expert talks, and handy tips. So if you haven't hit that subscribe button yet, do it now and hop on the money train with us. Let's get back to the video. So where does that leave us? The news keeps pouring in, reinforcing the narrative of inflation and the Fed keeping interest rates high for an extended period. Gold prices are plummeting, and the dollar is on the rise. But here's the twist. The market might have it all wrong. This is actually bullish for gold and bearish for the dollar. It's not a sign that the Fed is fighting inflation harder. It's a sign that they've already lost the battle. Fighting harder won't change the outcome, and it might lead to an economic collapse. We've reached a critical crossroads. The Fed's ability to kick the can down the road has finally caught up with it. No matter which way they kick it now, disaster looms on the horizon. There's no policy choice that doesn't lead to imminent disaster. Amid the tumultuous economic landscape, there's a guiding light in the form of Peter Schiff, a seasoned investor who has honed his skills in navigating treacherous waters. He holds the key to a secret, a mere $20 asset that could serve as your lifeline in times of economic chaos. It might be high time to adopt Peter's strategic perspective, one that's akin to a game of chess in a world where many are stuck in a game of checkers. Within his own investment portfolio, Peter Schiff has staked a substantial claim in mining stocks, an area that has witnessed its share of turbulence in recent times. However, this turbulence doesn't faze him. Peter possesses a unique insight into the investment world, recognizing that most investors are merely reacting to short-term noise without a clear understanding of the broader economic landscape. It's as though they're engaged in a game of checkers, responding to immediate moves on the board. In contrast, Peter is playing a complex game of chess, contemplating multiple moves ahead. He perceives the bigger picture, understanding that everything unfolding now is, in fact, a blessing for gold and a curse for the dollar. Peter's approach is a lesson in strategic investment. While many panic at the first sign of market turbulence, Peter remains steadfast, knowing that sometimes the most significant opportunities arise from chaos. By securing a substantial stake in mining stocks, he's positioned himself to harness the potential of precious metals, especially gold, which tends to shine brightest when the economic climate is overcast. It's a long-term perspective that distinguishes Peter's investment strategy, a perspective that goes beyond the ebb and flow of daily market fluctuations. Instead, he's looking at the broader economic the storm and emerge stronger on the other side. It's time to think ahead and secure your financial future just like Peter. Thanks for tuning in. We hope today's video gave you some financial superpowers. If you loved it and want more, give us a thumbs up and subscribe. Your financial journey just got a whole lot cooler.